Well, good morning, traders. This is Blake, and you are listening to the Face Show. I hope everybody's having a great day. If I sound a little congested, it is because I am congested. So I woke up this morning and my nose is a little stuffed up. So I'll get over it. It'll be fine. We're going to cover a few things today before I bring in Ryan and Kman from the Flow Show. But obviously, the things that we need to talk about are the importance of today's Supreme Court decision. Now, I know that most of you guys are aware that the Supreme Court is going to be ruling today. They were supposed to do it on Friday. They're going to be ruling if they deem the Trump administration's tariffs on the IEEPA. I think it's IEEPA. I always get that acronym wrong. IEEPA tariffs. That's what it is. We should get a ruling, an opinions ruling today, and it's widely expected. I would say it's, if you threw a percentage on it, 70% expected that they're going to rule against the tariffs. Now, the initial reaction, what people expect is you expect the dollar to weaken and you would expect the bond market to weaken. How stocks react, that's the other question. The first reaction that you think about is you're like, okay, the bond market may be under pressure. Now, if it's under pressure, that's going to send yields higher, right? And we all know that if you're looking at the 10-year, we have a couple of really big levels ahead. We have the 420 level that everybody's looking at, obviously resistance, but just keep in mind that the 200 DMA is just above that as well. So if we get a rally in yields, that means we're getting a sell-off, unless I'm just using the 10-year notes and they continue to break lower. They came out of this ascending channel. So they break this 200 DMA, it's the opposite of yields, right? If yields go up and the dollar goes down, that is the big risk, right? If you see the dollar go down, yields are going up, that means bonds are going down or notes are going down. And then if you see equities go down, that means that it's a sell America trade, selling everything, US. That doesn't happen often. And it usually happens if you're a longtime listener of the Face Show or the Morning Edge, my feelings about that. When you see dollar assets being sold across the board, that is a very, very toxic and dangerous situation. I don't expect it to be too, to last too long, just because the Trump administration has been very clear that they have other options to enact tariffs. But if the Supreme Court rules against it, it is going to be quite messy. And like I said, I'm not sure how equities are going to respond. However, we all should be very aware that we are up against long-term channel resistance. Now, I'm using the S&P here, so you guys can all see this very long-term. Since 2018, we've been in this channel higher on a weekly chart. We've been brushing up against the upper end of this channel really since at the end of last year. You can see it. We're just nudging our head up against it. Every time we hit new highs, we find sellers. This week we hit 7,000. We found sellers, and it dropped us 50, 60 handles thus far. If you look at last year's price action, which I'm gonna highlight with a pen here, you can see last year's price action right here. It is exactly the same. Greg Horvat, who does the Elliott Wave analysis on Forex Analytix. So if you guys, are on Forex Analytix and you're a subscriber and you look at, Elliott Wave of the S&P, Greg has noted that, hey, we're in this ascending wedge. But he also mentioned it last week that a couple weeks ago at the beginning of the year, that it's very similar to the beginning of 2024 setup. And you can't deny it. It really is. I mean, if you zoom in and you look at both ascending wedges here, you look at them, very, very similar setups going into, this is mid-February, right? So as a result of that, you guys have to be really careful here. Knowing that we're up against channel resistance, we're up, you know, we have these ascending wedges, which, by the way, an ascending wedge by default is a bearish reversal. All right. So this is and that's one of my favorite chart setups for those of you that know me really well. You know, when you see these ascending wedges, you got to be really careful. That doesn't mean we can't accelerate higher, but when you're talking about probabilities, right? You know, when you see a resistance here, and then, you know, a breakdown support would be here. When I start talking probabilities, I'm talking there's a 35% chance in my guesstimation that we move higher, and more like a 65% chance that we move lower. Does that mean that it's 100% chance we're moving lower? No, not at all. We could have a blow off top and, you know, just start really breaking to the upside. But knowing that we're up against big resistance. Oh, and then also, not to mention, you know, you look at like the longer term Elliott wave counts. We're in the fifth wave, somewhere completing up here, and that's on two different counts, by the way. And I just be clear here. Let's go to my secondary charts. You can see two wave 5 counts, one from the bottom of that channel, the other one from the October 2022 lows. So this would be post-COVID lockdown lows, and this would be, you know, that bear market that we saw in 2022, the end of that, starting another wave 5. Both counts end around where we're at. So there's a lot of resistance up here. Like I said, it doesn't mean that we can't break higher, but the odds are stacked against the market at the moment, technically. Okay. And so knowing what's ahead of us, knowing that we have this big Supreme Court ruling, and some traders are like, yeah, I don't think it's that big of a deal. We had Francisco, who's one of the traders in our chat room. He gets some institutional analysis and flows, and we talk a lot in the chat rooms. He's like, I'm not sure what the big deal is here. It's going to be more the execution of tariffs that really give us the response in the market. I agree with that sentiment. However, the execution of tariffs is going to be a lot more complicated and a lot more messy without the Supreme Court backing the Trump administration. So the risk here is that the markets could really come off. And I'm not saying that, you know, hey, the Supreme Court rule against, you know, the Trump administration, we have to flat out just be short equities, but I think you have to be defensive. And that's the other thing. Now, the flip side to this, and I'm going to bring in Ryan and Kman here in just 1 second and let them bring us up to speed on what's happening in Europe. And by the way, if you want to know what's happening in Europe, you can listen to the Flow Show, which I always do every morning. I did this morning. You can also, you know, scroll through the Live Squawk feed and go, okay, I went to bed here, and so what did I miss all night long? And that's a really great way to get up to speed on everything that you missed. But one last point I wanted to make is, what if, you know, the Trump administration or the Supreme Court rules in favor of, you know, of Trump, the Trump administration and tariffs, and says, you know, the Trump administration is well within the right to enact the Emergency Act, the IEEPA tariffs. What happens after that? Well, I would expect that we do get a rally higher in equities, and I would expect that the dollar rallies pretty aggressively, and we see a move in the euro dollar below 116. And you would see, just because I want to reference this chart really quick. This is the euro dollar chart, right? We're obviously in a very big consolidation between like 115 and 118, but the 116 level represents horizontal support and also a 618 retracement. So if we break below that, we're probably going to break back below the 200 DMA as well. That's what's at stake today. And we were hoping that this would all come out on Friday, but it looks like it's really going to be more of, it's going to happen today. So I think it's going to be a huge day in the markets. And I hope we can, better prepare you. If you guys really enjoy, the morning edge, make sure you do the rounds, give us a retweet. If you see us on Twitter, we don't ask for much around here. It's a free show we've been doing for 8 years. Give us a retweet, like our shows, share it with your other trader buddies. We'd appreciate that. Ryan, let's get an update from What's been happening on the other side of the Atlantic this morning?
Not a lot. We've all been sitting with our feet up. No, it's worth pointing out. It's not 100% guarantee that we're going to get this decision today.
Well, it was
We're in the same,
guaranteed that we get it on Friday.
exactly. We're in the same position that we are on Friday. We were supposed to get it Friday, we didn't. I don't think these things are set in stone. They'll drop it when they want to drop it. But we'll see. We'll keep our ear to the ground. I've put the various links in the chat room for our users to keep an eye on when we get any information at all. Otherwise, it's all been about the yen this morning. We had that new high overnight, 159.45, and then we had. They noticed that the yen index has been falling out of bed again, and we've had a big round of verbal jawboning from Katayama, Mimura, and one of the other cabinet guys. Katayama repeated that she held strong talks with Besant and whatnot. The market took a little 20 pip dive on that. Then it recovered back into 159. Then Mimura came out saying that he's extremely concerned about these moves. And it's not just dollar yen that they are watching. They are looking at other pairs as well.
Why? I mean, it's not like the euro yen or Aussie yen haven't been going straight up for like literally the last year or so.
Exactly, but it's an important comment because it tells you they're not looking at dollar yen, which we all know, but sometimes people need reminding. And then you can looking at the yen as a whole, and as I say, that yen index is absolutely falling out of the bed at the moment. It was 74.53 on Friday. It was 73.55 today. Big moves in that, big yen weakness across the board. So it may
63. Just a quick correction, but we get what you're saying. You said 73.
This is the Bank of Japan's yen index.
I'm sorry. I was looking at the CME futures right here.
Yeah, okay. This gives us an indication of how weak the yen is getting, and it's now well below some 150 odd points, 130 odd points below when they intervened in 2024. But his comments also potentially open the door for possible collaboration. If not with central banks, they might call up some of their agent banks in other countries and start selling and ask them to sell the respective currencies rather than just going it alone and hitting dollar yen and whatnot. So it's just broadening what we may get from intervention as opposed to the standard stuff. So we're still in high intervention watch.
Yeah, we are, and I was just drawing on the charts because making sure you guys are actually looking here on the screens. I know a lot of you just listen to the audio. This is one of the very few times where you see a death cross and you're like, holy shit, that actually worked really well. This, like, soon as the cross happened, it's like boom, it's like straight down. But that is actually a death cross on the 6J, and it's continuing. And to be honest, when you're looking at this chart, it's really simple here. I mean, we might get intervention, which, I'm gonna go to Kman here in just 1 second. We might get intervention. I think we're taking steps, or the Ministry of Finance is taking steps towards intervention. But if we get a move back up to the 50 DMA, that's going to give us a great opportunity to be back on the short side, especially if you're you believe that this prime minister is Abe, the late Prime Minister Abe's second coming, and you believe that the yen is actually going to continue to get destroyed. You take a 2 or 3% move higher. In this case, it would be in a 2.5% higher, getting us to the 50 DMA, and just roll right back over. You know what I mean? That seems logical. And matter of fact, let me bring in Kman really quick because I want to ask a couple questions. So if there is now, for those of you that don't know, and I don't think you get enough praise around here on the F.A.C.E show, I always want to make sure people know what your experience is. I think Kman spent how many years on a yen desk in Japan? 4, 5?
Yeah, 5 years in Japan. I was an FX spot market maker for 5 years in banks.
Right. So basically what I'm trying to say is, Kman, you know what the hell you're talking about, especially when it comes to intervention. I've traded through a lot of intervention over the last 20 years, but you have, and you've been on desks, you've seen flows as they come through. You know what the steps that the Ministry of Finance takes. Tell us a little bit about that and why it matters. And would a 2.5% to 3% rally in the yen be a good level to sell into? Because isn't that what normally happens during intervention? But go ahead.
Yeah. So there's various ways they can do it. They can just go in the market, sell. Let's assume it's just dollar yen, because there's other variations possible this time. But let's assume it's just dollar yen. They can just go in the market. They can ask their agent banks for rates and sell. They can also ask other central banks like the Fed and ECB, for instance, to join them, who would then act on behalf of the Bank of Japan, which is the executioner of all interventions, where MOF makes the decisions. So they could go with several rounds. What we have seen before is usually they don't stop at one round. Yeah, trying to put it as low as they can initially, and then see how the market reaction is to see whether they need several rounds or not. Whether the market is going to be waiting for them at lower levels, for sure, but they can, in the event the market is really adverse towards the yen, once they stopped intervening, they can actually also have the option to just go sit on the offer somewhere, and after they have done interventions, and just cap the dollar yen for very, very substantial amounts. And I'm talking about several tens of billions of dollars. They do have a total of $1.3 billion reserves, of which about 1.1 or so billion dollars in treasuries or some other currencies as well, like euros. So they have a lot of ammunition to do so. But in the end, it's for them at least the wrong side of the intervention picture, because if they would be buying dollars and selling yen, they can just print the yen. If they decide that they want to keep the bulk of their FX reserves, they're going to have to do some other stuff, like, for instance, selling treasuries and etc., etc. But if they would come in, I could see several rounds, especially that it's done with the blessing of the US Treasury, and potentially with the help of the Fed, if the Fed would get the instruction to do so by the Treasury or by the MOF, Bank of Japan.
And let's not, thank you very much, Kman. And let's not forget that the Bank of Japan, Ministry of Finance, Japanese officials have already had discussions with the Treasury Department. They've gotten the green light. This is several weeks ago, as we've all been on intervention watch. But it doesn't mean that it's going to happen. And if it does, I try to look at it as I want to trade it as it's happening, but more importantly, I like to try to reverse it. So in other words, if I could be short yen on any rally, I'm gonna do so. And I think you're probably in the same camp, aren't you, Kman?
Well, this time I've played it the last risk that there was, played it via an option. I bought a once 57 3/4 put, and then I'll hedge mine notional. The lower it goes, the more I will hedge, and so I can play virtually both sides of the coin if they would intervene, because the option market is still relatively in yen terms cheap. So an option was the best solution for me, because if they don't intervene, we have seen dollar yen and some yen pairs come down this morning in Europe. But if nothing happens by the time we get over the London fixing hump, I can just see the market reverse it again, and the dollar yen ending above 159 again.
Right. Okay. All right. Well, thank you very much, Kman. Really appreciate your commentary. I want to turn our attention a little bit to precious metals. So silver, I mean, can you guys believe this? I mean, Silver and gold. I mean, just the continued rally here. I mean, silver is, above $90. We're almost at the 161% extension. What a big movement. We've been looking at this bearish crab pattern developing. If you just look at the let me pull up silver really quick over here on ForexAnalytix. Let me get to it. Yeah, here's the harmonic pattern, and you can see, we're right around that $91, $92 level. This should be some pretty critical resistance. We'd expect some consolidation from here, but man, it just continues to surge higher. I mean, I wouldn't want to stand in front of it, but it's obviously very divergent relative strength. It's interesting. 2 weeks ago, we were like, well, why can't it reach $82? And, today we're probably asking the question, why can't it reach 100? It still is pushing higher. Again, I want to reiterate, we are at 161% extension of its last major, consolidation here. So, chasing it into these levels obviously is a little bit of a risk. I think it's one of those situations where it's too strong to be shorted, but also, too overbought to be bought, and as a trader, we're faced with those situations a lot. It's like you can't really chase it, but you don't want to short it, in this case, or, fade it because it is so damn strong. Gold, on the other hand, gold continues to forge new highs, just not as strong. And same with palladium, and then platinum is trying to get up towards wedge resistance, but it is kind of stalling here. All right, let me go back to Ryan, and let me ask you, Ryan, aside from the yen, what other currencies have your attention today? What are some key levels that you're looking at? Because I guess we can really, look at the dollar mex. I mean, this thing's freaking just been demolished. Fade no Mexican peso strength at this point in time, right?
Well, I wouldn't say it's been demolished. We've just broken out of a range we've been setting for pretty much the month of December. I'd like to see a confirmation back up at 1787 to confirm the break. Then I might jump into add to my short position.
Short
Dollar
Mexican
mex.
peso, meaning
No, short. No.
Oh,
I've been short.
you want to do this?
Yeah.
Got
I'm
it.
still
Okay,
holding a
got
bit
it.
of short from the 21 level, so I'm still sitting and milking the carry on that front.
As you should be.
1740 is the massive level below. It's on a par with the 1850 down at 1740. It's another multi-year level that goes all the way across. So if we keep going, we do have some bits and pieces in the way. There's some prior lows around 1760s, a long-term trend line from 2008 coming in at 1750-51, but that 1740 is going to be a humdinger, I think.
Yeah. You want to talk about a long-term trend line? I remember. I remember, and some of you were listening to our show. It wasn't the F.A.C.E show at the time, but it's back when I had the Morning Edge, broadcasting around here, and I remember when we were sitting. It was right at 2011 or 2013. I think it was right there. And Kramer came on CNBC and said, I think the U.S. dollar Mexican peso drops, back below 10. And I happen to be long at the moment. And I was like, what's Kramer doing talking about the peso? That was the bottom, literally the bottom for the next decade. So it's been an amazing move. We have a lot of support down here as we get back down towards 17. But it sure does feel like we're going to get there, doesn't it, Ryan?
We could get there. There's no denying that the trend it's been in all last year, and it doesn't look like it's changing this year either.
Yeah. All right. Well, it doesn't, but I think a lot of that would change. And one thing that we always have to keep in mind is risk flows. So if the stock market actually starts to show some signs of weakness, we actually may at some point see some emerging market currency weakness. But you could see that the Rand right, Kman? The rand has been just a nonstop bulldozer in one direction. It's like a wrecking ball lower. I feel like kind of stupid not being short this thing because I remember when we broke through here like last month, and I'm like, oh, I want to get short the dollar rand, and of course I'm not short. I just let it just get away from me, and it just has not put up its head for air at all. What do you think about these emerging market currencies there, K-Man?
We're on an interesting level in the dollar mix around 16.30-35. Dollars are, sorry, dollar rand around 16.30-35. I mean, I didn't even believe in the rand strength, just because there was so much fight back against the BRICS currencies, etc. Yeah, we're on an important level. Get through 1630, there may be another leg coming, which is going to change the big figure, and we're going to trade into 15s. The whole move higher from 20, let's say, yeah, from you can go back to 2017, but if you stop it at in 2021, the post-pandemic, the 61.8 comes in at around 1588, which is possible in current scenario. But I mean, I still fail to see why I should be wrong long rand. So this is one that I'm gladly leaving alone, and I'm very happy not to have lost money being on the other side.
All right. Well, hey, I want to thank our viewers for listening in today. Our viewership is up about I want to say about 15-20% higher than it was a week and a half ago. So I want to thank everybody for your support here. We've been kind of scrambling around for the last week, making sure we have all the pieces going. So glad you all are here. Thank you so much for your support, and we appreciate that. Before we get ready for this news, and we have not only producer prices coming out. We have retail sales. We're going to do instant market reaction. We have JJ, VWAP trader, who's going to be joining us for an interview right after we analyze or break down the reaction from the market. So make sure you stick around for his interview. But also, I want to mention that, look, we got 4 days left. You guys have 4 days left for the trader funding program to get 30% off. Did you know you can qualify for up to $1 million in currency? $1 million. We have a lot of $1 million traders that we've had over the years. This is a great opportunity because, when we give these discounts, because it's a significant one, even on, instant funding accounts, you get 30% off. So make sure you check out the trader funding program. You can find out about that right on our website. All right, let's go into, setting up for today. I'm actually going to, pull up as I normally do. I'm going to have the dollar index right in the middle. I'm going to have yields to the right. We're going to put the S&P over here to the left. I am going to put it on the 15-minute chart so we can kind of get an instant reaction from the market here. And then also I'm going to go to Forex Analytix, and I'm going to pull up the data flash, which you guys can pull up yourselves if you want. Data flash is nice. It's kind of like those of us that have used Bloomberg terminals and paid $2,500 a month to use them. One of the features that I used probably more than anything was just economic data when it came out, and this gives you basically the same thing. So we got retail sales, core PPI, and you're going to see that data come out over here. So I'm going to switch it back over to Live Squawk. Let's go over to the S&P, or excuse me, over to our charts, and you guys can see we have everything here. Ryan, we have less than a minute. Actually, yeah, we have less than a minute. Any last minute thoughts here?
No, just these retail sales are going to be interesting just to see if, because they're November, which is obviously the start of the holiday 2 months, November, December. So let's see if you can bet against the US consumer once again.
All right, let's see if we can. K-Man, any last minute thoughts here?
Yeah, same thing. I think the retail sales will be slightly more important than the PPI, since we had CPI out already. That's about it. And then
and PPI is like December and November data, isn't it?
Well, that's what I'm always wondering about. I mean, but I've been told that they're all caught up. So I don't know whether we have combined data.
I don't know either. All right, let's see what happens here. All right, retail sales stronger
Good,
than
good,
expected.
good.
Good.
Well,
Revised
Headline good.
lower.
PPI
Revised
hot
lower.
as well.
Core PPI came in weaker than
yeah, a little
expected.
hotter.
Hotter
Hotter.
PPI.
Month over month came in
Year
little
on year
light.
is up. Year on
Year
year,
on year is
3%
up.
versus 2.7 expected. Core PPI, if you want to call it that, 3.5 versus 2.9 expected.
Okay. So the year over year figures are a little bit hotter than expected, but the month over month, and we're really trying to focus on, what's happening in recent data is a little weaker, stronger retail sales, but also revised lower on both core and headline numbers. Looks like kind of a mixed bag today. We're not seeing any reaction from the market. S&Ps are off just a few handles, and the euro is, I think it dropped like 3 or 4 pips. I mean, yeah. Any takeaways that you guys have from here?
No, we're all waiting for what SCOTUS has to say.
Yep, looks like SCOTUS is the play today, and you guys all should know. Well, let me give you some, just actionable ideas while you guys are here, really quick. My eyeballs are on the euro today, and it's real simple. You break above 116.80, and then you're probably off to the races. You're probably going to be trading back in the 117s. You trade below 116.30, then the risk is you break below 116. Below 116 gets very, very dicey for euro longs. Positioning is still pretty long euro, short dollar. So, you can't rule out a downside move, especially if, the Supreme Court, sides with the Trump administration. So I think the table is set. The levels are also set, and we are ready to trade them. And so I hope you guys, walk away from today with some good ideas, and make sure you're back tomorrow, because we're going to be, we still have the second half of the week to trade. But don't go anywhere, because we have JJ VWAP Trader. I'm going to bring him on over. Kman, Ryan, any last minute thoughts as I go find JJ really quick?
Not from my side, no.
All right, and JJ, if you're here, can you please? I'm not sure if I've got you correctly.
Is that FFFDD or not?
Oh, okay. Well, that is.
I don't know. I'm
Yep.
just
Nope.
wondering
That
because
is
that
that is
person
it.
raised his hand.
Got it. All right. Let me see. Bringing them over. Okay. Yeah. Ryan came in. Any last minute thoughts, guys?
Nope, nothing. Have a good interview, mate.
Hello.
Hey, JJ.
Hey, how are you?
Good. Hold on 1 second. All right, guys. Hey, once again, thank you all. Remember, the place to be. You want to be, with the Forex Analytix community. Jump in. Just take a trial. It's $1 for 10 days. You can. Mark, that's funny. You can jump in the chat room, have conversations with us, know what we're all thinking in the markets. So we'll see you all there. This is the Forex Analytix chat room. So just like I said, be around for the Supreme Court ruling. It's $1 to jump in there. All right, JJ, I've done an interview with you before. I've had to fill in for Dale before. I remember.
Okay.
I can't remember exactly when. I'm not really good with exact dates, but I know I've interviewed you in the past. So how have you been?
Good, sir. How are you?
I'm doing all right. All right. So tell us a little bit about, for those people that are unfamiliar with you and haven't heard you, a half a dozen times you've been on the F.A.C.E show. Tell us a little bit about yourself.
Okay, I've been in the markets for 34 years. I started out in Vancouver and crawled my way through the sewers of the penny stock exchanges. And yeah, so I was an executing trader for insiders. When a fund manager wants to hide his order, he'll route it through Canada. I was that guy. When they want to sell quietly. I traded for Swiss banks, offshore institutions, always the smart money. I've always been a liquidator. So, you guys take a deal public, you've got a couple of 100 million shares. I help you put a program together over 18 months to 36 months so you can dispose of your stock. create the chart so we get retail to come in. Charts are like a party invitation. We build a nice, beautiful chart, get the retail to come in, and then we liquidate. So I've done that a couple of hundred times now. I've done 200 IPOs, RTOs, you know, shells and SPACs, and taken companies public in Germany. Did a lot of those in the 90s when the tax laws were very favorable. A lot of U.S. product went over there to Germany. So a lot of my specialty is really the plumbing in the U.S. equity markets, DTC, cross-border clearing, stuff like that. Had a heart attack in 2012, so I had to do something a little less stressful. So I thought I'd learn how to trade retail, which, dear God, was one of the hardest things I ever did because you have to have discipline and all that stuff, which we never had. So it's been a journey. I stumbled onto Market Profile with Jim Dalton, thank God, because I couldn't memorize candle patterns. And over the last, since 2012, I've been, working with retail traders and trying to show them the business and trying to simplify their execution. So, they're not looking at 300 things when they execute. So they execute using some common sense and an understanding of the business. I definitely, I'm an inventory trader, and so I trade inventory, and, not to use a marketing term, order flow, which is a marketing term. We're all order flow traders, no matter what kind of trader you are. If there's no order flow, there's no trade. So yeah, I try and take, the complex, make it simple because trading's not easy. So, retail needs to have a simple business plan where they can manage their risk, know when to trade, when not to trade, that kind of thing. So that's what I've been doing. And I've got a podcast, Confessions of a Market Maker, and we've had, Jack Schwager and a lot of the traders from there and some interesting people on there. So I've learned a lot. It's been a great, decade where I've, been learning and met coach and, get to talk to folks. And, I was listening into the Forex stuff, which is something which is completely outside my wheelhouse. So, I always learn. That's one beautiful thing about this business. You learn something new every day.
Yeah, it's interesting. Back in let's see, I started block trading in the Scottsdale office. They had two offices, one in Austin. They were the SOES Bandits, the original SOES Bandits, if you guys remember.
Oh, okay. Yeah, yeah,
Yeah,
yeah.
so when Forbes magazine did an article on them, I went to their office in '96. Started trading in November of '96, and my buddy did exactly what you did with IPOs. So he learned from market makers how
Yep.
to bring, .com companies public. One of them was GoToNet, for example. And so we would trade, instead of using somebody like you, we would self-direct through Instinet,
Yeah,
Archipelago. And
yeah.
so, but we would be sitting next to each other, and I'd come on the bid with, like, on some illiquid stock with, like, 500,000 shares to buy on Instinet, and then I'd come with another 300,000 shares on Archipelago, and then I'd take ReadyBook and jump above them all. And
Yeah.
I'm good for it, but I jump above them all for another 300,000 shares, and the next thing you know, I've just moved the stock 50 cents. And then my buddy next to me would be on the offer, and he would sit on the offer and just sell it out. And so
Yep.
we would make, a buck to $2 on between the two of us on all these, like, very illiquid stocks, on a daily basis. So, but doing it with 10,000 shares, 20,000 shares, so we'd make 10 or 20 or 30 grand a day between the two of us, and we did it quite a bit until we got a call. Apparently, we got tattled on by it was Cantor Fitzgerald, actually, I believe, that had called the CFTC or whatever. They called our desk, and we're like, "Hey, dude, we're two 26-year-old kids. Like,
Yeah.
you're gonna sit there and complain about us, you bunch of ass
I
wipes."
know.
We're like,
I
this is
they
back
always
in
they always
97, 98. Yeah, it's
they
crazy.
always go after the small fish,
Right. Like,
because they're easy to get, and the small fish don't have the $3,000 an hour lawyers. right?
Right.
So
Well, exactly. Well, they tracked us down finally. It took them a long time to figure out that it was a block trading office out of Scottsdale, Arizona that was doing that. Anyway, it was a good run while we did it. Then the internet boom happened, and then it was all history. But yeah, funny stuff. You know, back then, decimalization really changed
it
the
did.
landscape of what you and I did.
Oh,
And
totally.
as soon as they removed, yeah, I mean, as soon as I stopped trading for quarters or eighths or even sixteenths or what we call
Yeah,
teenies,
or
you
30
know, it's
seconds. Yeah,
yeah,
yeah.
or 30 seconds. I mean, you go to decimalization, our margins just went to crap. And it's that was like the death of the SOES bandit, if you will. And that I think that happened 2003,
I
maybe. I don't
I
know.
can't remember what decimalization happened. I remember when I started on the desk in 95. I remember the market makers would give us mouse pads that had the fractions on them that would
Yeah.
convert because we were too stupid to, convert fractions in our heads, right? You're writing because we had to write out paper
Now
tickets.
that's your
So
own fault, buddy. I'm,
yeah,
I'm
I
sorry.
remember we used to have, yeah, Wilson Davis was the market maker. Wilson Davis, Salt Lake City. They would send out these mouse pads with the conversion on them. They were hilarious. And then, decimalization. But yeah, I've always been an insider. So I've always been a seller. I've always been a liquidator. Like my clients would never go, should I buy this stock or something? They'd go, there's 25 million shares and, three or four offshore accounts. You'll get a call from this bank. We're going to go to work and bring the promotion in and start pumping this thing. Make sure we don't have any stock at the end of the month. So they'd call me up every day. They go, what's the volume? It traded 10 million shares. How much did we sell for? Great. See you tomorrow. Click. And
You
they didn't
know,
and they
yeah,
didn't ask what the price was because when you do deals, you get your stock at 0.001 cent or 0.0001 cent, and you're
sure.
selling it at 30 cents, 50 cents, $5, wherever we can get it and wherever they'll take it, we sell it. So, people were like, "Hey, JJ, can I show you a bid for 100,000?" I'm sold before they even, you don't even know how much I want. It's like sold, you know.
Yeah,
So
look,
the market makers would call me and I would just backfill from offshore.
I think the takeaway here, guys, is one of the things that what JJ is talking about and what I was talking about a little bit earlier, and one of the things that I learned early on in my career, you know, back in the late '90s is volume and liquidity matters, and I've seen so many people get trapped in stuff. They you know, a buddy of mine just recently happened to. I'm like, dude, you own way too much of a stock that only does like $50,000 or 50,000 shares a day in volume. Like, if you have to liquidate, you're gonna literally cut that stock down by like 3 or 4% just trying to get out.
Oh
And
yeah.
that's why when you're day trading anything that you're trading, you want to make sure it has good liquidity. One of the benefits of the FX market is it is the largest market in the world. There ain't no JJs out there or
Yeah,
no
exactly.
banks that can really influence what's happening in currencies.
And that
Obviously, unless you're a central bank.
Yeah, and
So,
that's why I trade the ES and the ES only.
mhm.
And I teach people how to use the micro to learn, get their training wheels, and then once they get consistent, we go to the mini so they can actually earn a living. It's very much trading for, make your daily bread and get the hell out before you do something stupid.
Let's
Uh,
talk about that for a second. I've traded for a living exclusively in the markets multiple times, and I have a few rules that I follow that I think everybody else should follow. But I want to hear what you have to say. What do you think that anybody and everybody can trade for a living?
no, I don't.
Okay, why?
Uh, because you need an enormous amount of discipline, focus. And even though markets are simple, they are not easy. And unfortunately, we live in a world where people have a 10-second attention span. So you have to be able to concentrate and not look at 300 different things. It's very hard for people to do that, to sit and concentrate and look at something. It also is hard for them to come up with a simple business plan. So when I coach people and I teach people in our room, trading syndicate, I go, listen, we have terms and conditions under which you take a trade. If those terms and conditions aren't there, you do not deploy capital. And, there has to be a business reason for a trade. If there is no business reason for that transaction, why are you in it? And if that business reason goes away, you got to get the hell out of Dodge That's why you use stops, because they're insurance on your account, and they also give you information about the order flow, right? So they're very, very, there's a strictness to it. Like, when I came off of institutional trading and making markets and doing deals, it was no big deal. If you needed 20 grand for the weekend, you just sold 20 grand worth of stock, got a wire, and you're done, right? Here you had to journal your trades. And I remember, on the desk, if somebody saw you writing in a book, they're like, "What are you writing, poetry? We're going to the bar, after the close." So that discipline is very hard, especially in this day and age. And there's so much misinformation out there about trading. People selling, snake oil software and courses. And,
Yeah.
you've got people out there who are like, you've got people who are teaching volume profile analysis who've never traded more than 1,000 shares of a stock. How the hell do you know how to trade size? Because you don't know how size transacts, right?
Right.
So
Right.
you've got all of this misinformation. And unfortunately, retail trading and the education around it is not licensed. So any idiot, I was on the fry machine at McDonald's, now I'm a trader. So I stand next to some dude's Ferrari, do a nice video, get a couple of pretty girls, show a couple of fake Rolexes. Next thing you know, I'm charging people $1,000 a month. And that business model has really not done any service to the retail community. So, people come and go, and we've had thousands of people come through our room. The ones who stick, I can count them on, two hands, and they put in the work, and they're in there every day. And everyone's like, "Oh, I want to quit my job and be a trader." I'm like, I have multiple sources of income, so I don't have to trade desperately. I teach, I still do deals. I'm taking 3 companies public. I'm looking forward to the tokenization of equities, because that way I could do a deal every week without lawyers and transfer agents and all that stuff. Liquidity is my thing, because I look at a market, and like yesterday, what was this? Some garbage stock, EVTV. It traded $1 billion worth of paper at $3.58, right? I mean, if that was my client stock, I'd have to be 30 to 40% of that volume. So if you see a stock trade, I just look at dollar volume. I don't care what the price is. I look at the dollar volume. If it traded like XAIR, it traded $786 million worth of paper. I call it paper because we used to get paper stock certificates. So I've got to be 30 to 40% of the sell side. That's all my clients care about. So the market makers show me bids. I work out paper, make sure I don't, depress the price too much, let it breathe, let it come up, sell into it, let it come up, sell into it. Sometimes, I'd sell a market down, and then I'd have one of my market makers show a bid for 1 million shares, pull all the offers, rip it back up, sell back into it. It's all about distribution, right? Because
It is.
it's a
Yeah.
market. People forget it's a market. If it's not the stock hot tub, it's the stock market. We're here to take insider smart money and get them liquid. That's the
Yeah.
that's the business, is to create liquidity so insiders can take what they bought, at 10 cents, sell it at $3, reinvest that money in a new deal and go again, you know?
Right.
And
And
yeah.
so guys, this is these stories of these companies and whatnot. This is where you as a trader, again, need to be thinking about liquidity. Think about what's actually happening when a stock goes from, 80 cents to 260. You have to realize that the smart money owned it at 80 cents.
Actually, they
And
own it
if
at a 40% discount to 80 cents because
yeah,
they've
I
got a
mean,
convertible,
right.
right? So what we do
Exactly.
is, if we're going to finance a company, we'll short it. We'll short it from offshore couple of months earlier. So say you trying to raise $20 million, your stock's at $10, right? The word gets out, we'll start shorting it. I'll drive it from $10 down to maybe 6, right? We'll hide that offshore short position in Switzerland or wherever, right? And that's another thing. You need to hide a short position for your year. I'm your guy. We do stuff like that. We take advantage of cross-border clearing and the system, because you got guys like me who know the system inside and out. So we get the stock to 6, then we do a 40%, 30% chop to 14-day VWAP. So my clients have the stock at nothing. The company will give you the stock because CEOs go through money like poop through a goose, right? They don't have the earnings to keep the lights on, so they got to sell stock at a discount to keep the company funded and to keep their Mercedes-Benz lease and their $8,000 house lease and all these things. So they'll agree to it. They don't care about the shareholder. I've never met one CEO actually gives a crap about his shareholder. So once that's done, we cover our short position. We get a nice position. Then we roll the stock and run it up from 80 cents to $2. And then, I gap it up in the morning, right? Because in the morning, what you do is you don't have to buy a lot pre-market. You tell your inside market makers, stay away from it. You open the stock at, it's 80 cents close. The next day you open it at $1.10, and that trips all the filters, all the lemmings come in, right? Sucker born in every minute, and you just gap it, gap it, gap it, sell into it, and then once it starts getting a little heavy, you just cut the sell, put in a big bid, lift the offers, and you just play with it all day, right? And you're back
Yeah.
and forth and back and forth. And your object of the game is to sell, if it trades 270 million shares, you've got to be at least a third of that sell side volume.
It's
Um,
it's it's an art, and the reason why I mention this all is because if you guys want to avoid all that, trade liquid products. Trade
exactly.
currencies, trade the
Yeah.
S&P,
Yeah.
find ETFs that you can trade.
You know,
Trade gold, trade silver.
yeah.
Silver is fairly illiquid
Here's the
actually,
thing,
but
and people don't know anything about this. Cost basis is everything. He who
yeah,
has the lowest cost basis has already won. So in small cap speculative deals, especially like, I mean, the pink sheets aren't in OTC markets. They're not really that popular anymore because they regulated the crap out of them. So they've gone to, the smaller priced, the funds are getting involved in these things. That's why there's so much liquidity. They finance these companies, and they're always selling. So somebody, if you're buying a stock at $5, somebody owns it at 10 cents and they're selling it to you. That's what
yeah,
people don't realize.
right,
So you get that big move up, everybody dumps into it. You give us your money, we go to the Bentley dealership, and then that's it. Next deal.
right,
And that's why I love futures, because there's nobody out there with zero cost basis paper. Like, for example, I have never paid for stock in 34 years, right? The first rule I had was taught to me by my first boss, because we were a marketing company. That's how I started out. We used to do direct mail advertising for pink sheet companies and bulletin board companies. And I said, "Hey, chief, which one of these deals should I buy?" He's like, "JJ, you don't buy stock, you sell it." And I was like, "Well, how do you get it?" He goes, "They give it to you for free." So when I work on a deal, they pay me an number of dollars a month in cash, and I get like 1 million shares for free. So I've never paid for stock in my life. That's why we'll sell it at 30 cents, 10 cents, a nickel, half a penny. We don't care, right? Because our cost basis is zero to nothing, right?
right.
Whereas in a registered product like a futures product or something like that, there is a cost basis, right? And even in deals like, the big deals like Tesla and Apple, and you can draw a volume profile on, a weekly chart over a year, and you can see where everyone's positioned. You can see the cost basis, and then the profit areas, 2 times, 4 times, 8 times profit. So, hey, at 8 times profit, should I be buying it up here? Or should I wait till it, gets into a better, zone for me to, you know, to be able to trade? And, like when the news came out, we went up to, what was it, 69, 69.80 and change on the ES. And I knew that sellers were going to be there. They were parked there, at, what price was that? It was 80 and three quarters. So it hit 80 and three quarters. The seller stepped in. You watch the offer coming down. When the offer comes down, you can see that, sellers are competing. That's why price goes down. That's why you always short the back end of the move, not the front end of the move, right? So when they start offering lower, you put your stop over 80. So I think I shorted 79, had my stop at like 80, 80 and a half, and then I covered down in the 76s, 75s, make a couple of points, on 3 to 5 contracts, pay yourself, and then sit back, wait for the next opportunity. You
Yeah.
know,
Interesting stuff, JJ. Well, hey, we could probably sit here and talk about
yeah,
market making and penny stocks all day long. I've had my fair share over the years, I'd love to have you back. I'll probably be reaching out to you. I think you and I follow each other, if I'm not mistaken. On
I pretty sure. If not, I will follow you. Just um,
yeah, let me double check here. I'm looking at
just
my own account, so just give me a second. Uh, Let me see.
What is Coach sick or is he?
No, he put in his resignation last Sunday, not this Sunday, last Sunday, and we
Oh.
had no idea. It was out of the blue. So I'll be doing the interviews from here on out.
Cool.
I love
Okay.
doing them, so it'll be great to
Yeah.
have you back.
Oh, it's good. He was always nice to me. So
Yeah, I mean, look, we wish him the best. People ask like, what his plans are, and I'm like, I have no idea. It was it was a little last minute, but hey, like I said, we wish him the best, and
me too.
we'll be doing interviews here on the F.A.C.E show, and I'll probably reach back out to you in the next few weeks to get you on the schedule. All right.
Sounds good, sir. Thank you so much for having me. And I'm VWAP Trader 1 on X and the
Yes.
tradingsyndicate.org. If you guys, if people need help, reach out. It's going to be a difficult market. I answer DMs as quick as I can, and my saying is, every time a retail trader makes money, a market maker gets his wings. So.
All right, guys.
All right.
Well, hey, JJ, it's been great talking with you again, catching up. I know it's been a long time. I had to fill in years ago to have you on, and really nice chatting with you again. So have a great one,
sir.
Everybody. Good luck for the Supreme Court ruling today.
Yeah, what time is that at? Do you guys know?
10
Because
a.m. Eastern.
I'm in the UK. Okay, so 10 a.m. Eastern.
Which should
flat,
be
flat or
3
be
hours.
fast.
Yeah, be 5 o'clock your time.
Yeah. So be flat or be fast. Okay.
Yep. There you go.
Thank you so much. Have a
All right,
wonderful
guys.
trading day,
Thank
guys.
you, JJ, and thanks everybody for tuning in. I'll catch you tomorrow on the F.A.C.E show. For the rest of you that are Forex Analytics subscribers, I'll see you on the Morning Edge in about